Assalamualaikum warahmatullahi wabarakatuh. We are from DIA6 Group 9 will presenting about ratio analysis of two companies which are BreadTalk company from Singapore and Dutch Lady from Malaysia. My name is Ahmad Lutfi Hakim bin Khairun and my group members are Muhammad Alif Rahimi bin Cik Mokhtar, Ismahani binti Muhammad Nazri, Nur Adlina Fakirah binti Muhammad Zawawi, and Siti Khatijah binti Shamsuddin.
This ratio based on financial analysis of Dutch Lady Company, which is a Malaysian listed company, and BreadTalk Group Limited Company is a Singapore listed company. Both companies are in the same industry, which is under consumer product sector, and have been in the food business industry for so many years. Besides, both companies are well known in the market and deal with a wide variety of food products. This is an analysis of the financial operation and performance of both companies for the last 5 years, starting from 2014 until 2018. We will present a financial ratios analysis of the profitability, liquidity, and leverage of BreadTalk and Dutch Lady using figures from the financial statement for 2014 until 2018. In the analysis, financial ratios are used to obtain critical reviews of specific areas of corporate performance evaluation because the ratio can give a clear picture of the company's overall performance.
For company's background, for Dutch Lady Company, the organizational structure of the company is headed by the board of directors with the highest position is chairman named Datuk Zainal Abidin bin Putih and followed by other directors. Other directors is Mr. Tarang Gupta, Tengku Nur Azan binti Tengku Syahriman, Datin Seri Sunita Meli Raja Kumar, Mr. Bernardus Hermanus Maria Koden, Mrs. So Chui Lee, Datuk Dr. Rosini binti Alias, and Jane Sir Crow. Dutch Lady Company appoints board committees with specific term of reference which are divided by two sides: audit committee and nominating and remuneration committee. The nature of business of Dutch Lady Company was manufacture and distribute dairy and the related products such as specialized powders and liquid milk.
For BreadTalk company background, this company is from Singapore and have been built for the last 20 years with rapid growing to be one of the greatest food and beverage company. Based on the graph, we can see that in 2014, the shady gross profit margin was 32.85%, a slight increase in 2015, which was 9.15%, making the percentage of their profit amounted to 42%, whereas for 2016, the percentage of gross profit margin was 42.37%, differed as much as 0.37% compared to previous year. Unfortunately, there is a decline of 4.69% in 2017. However, the performance of the Dutch Lady Company has shown an increase of 2.32% in 2018, making their percentage of profit value 40%. Meanwhile, for BreadTalk Company in 2014, the percentage of gross profit margin was 52.68%. Gross profit margin increased by 0.22% in 2015. BreadTalk Company's performance improved by increasing their gross profit margin in 2016 by 1.98% over the previous year, this making their total profit percentage for that year was 56.27%. As well as in 2017 and 2018, there was an increase of 0.69% and 0.7% compared to the previous year. From this analysis, we can see both of the companies are good at making revenue. But we can make an assumption that BreakTalk company has higher gross profit margin compared to Dash Ready. We can say that BreakTalk company has good cost control management.
For operating profit margin, as we can see from the graph here, for Dash Lady analysis, we can see the company keep increase their profit margin until 2016. But in 2017, they apply decline by 3.79%, making them gain of 14.79% only. In 2018, they were able to increase their percentage of 17%, makes the percentage increase of 2.21% compared to the year before. For BreakTalk analysis, in 2014, they only gained 4.23%. As we can see from the graph, a slight decrease of 1.62% in 2015, while in 2016, making them see a rise in the percentage of operating profit margins, and continuing their success the year before, they were able to increase their profit percentage by 0.73, but in 2018 they experienced a drop in the percentage rate of 0.42%. From this analysis, we can compare between these two companies. Dash Lady managed to get high value of operating profit margin compared to BreakTalk. Dash Lady can convert their revenue as much as 17% into operating profit margin. BreakTalk only managed to convert 5.11% its revenue into operating profit margin. Generally, business more efficient is when they can control their overall cost. It is because if they manage to control their cost, they will get higher operating margin ratio.
Lastly is net profit margin. For the Dash company in 2014, the net profit margin was 10.98%, while in 2015, there was an improvement by 7.86% over the previous year. However, in 2016, the percentage of net profit margin is decreased by 4.62% over the previous year. Meanwhile, in 2017, there also was a decrease of 3.16%. However, in 2018, the percentage of net profit margin has increased by 1.34%. Next is BreakTalk company analysis. In 2014, the percentage of net profit margin was 2.27%. In 2015, they improved their percentage of net profit margin, which is 1.8% over the previous year, bringing the total percentage of the year was 4.07%. In 2016, they have as much as 2.86%, while in 2017, there also an increase of 2.13% once again, and in 2018, they again experienced a 1.76% drop in percentage, bringing their total percentage of the year to 3.23%. From this analysis, we can conclude that Dash company has higher percentage net profit margin compared to BreakTalk company. From this analysis also, we can see that the most profitable between these two companies is Dash company. It managed to convert 12.4% of its sales into net income for 2018. Meanwhile, in 2018, BreakTalk only managed to convert 3.23% of its sales to net income. From this analysis, we can see both of the companies are good at making revenue. But we can make an assumption that BreakTalk company has higher gross profit margin compared to Dash Ready. We can say that BreakTalk company has good cost control management.
The graph above shows the current ratio analysis of BreakTalk and Dash Ready company. In 2015, Dash Ready's current assets were 1.27 times the value of its current liabilities, and BreakTalk could only reach 0.68 times. The current ratio between the two companies is a significant difference, but the ratio for BreakTalk in 2015 more than 0.64 times in 2014. This show a slight improvement. Unfortunately, the ratio for the Dash Lady was less than 1.44 times in 2014, indicating a sharp decline. This indicates that BreakTalk's ability to pay its current liability using current asset increased by 0.04 times, while the Dash Lady's ability to pay down decreased by 0.17 times. Surprisingly, BreakTalk's current ratio rose sharply to 0.98 times in 2016. Even though BreakTalk did not reach the ideal ratio, it was a good performance by the BreakTalk company, and the Dash Lady current ratio still decreased by 1.2 times in 2018. The BreakTalk current ratio remained 0.9 times as much as 2017. However, the Dash Lady current ratio showed a decrease from 1.02 times in 2017 to 0.95 times in 2018. Overall, the current ratio of Dash Lady is more liquid than BreakTalk. There is no ideal flow ratio, which is a good point in the inspection, because each country's businesses and industries operate with different levels of protection. However, less than 1 ratio is often a concern, especially if it persistent for a. The graph above shows that the quick ratio of Dash Lady was liquid than BreakTalk for 2014 and 2015. However, starting from 2016 until 2018, the BreakTalk company's quick ratio was liquid than the Dash Lady. Overall, among the two companies, BreakTalk are more liquid than the Dash Lady. However, quick ratio for 5 latest year for BreakTalk and Dash Lady show that both companies' quick ratio is not satisfactory because both are below than 1 times. This means that the firm cannot meet its current short-term debt obligation without selling inventory, because the highest attainable quick ratio that can achieve by both company only 0.93 times, which is less than 1 time, and it had been achieved in 2014 by the Dash Lady and 2016 by the BreakTalk. In order to stay solvent and pay its short-term debt without selling inventory, the quick ratio must be at least 1 times, but sadly, both companies cannot achieve that. The graph above compares the inventory turnover ratio of BreakTalk and Dash Lady, which is a company operating primarily in the consumer product industry. In 2015, BreakTalk inventory turnover ratio is 29.75 times, suggesting more than 26.25 times in 2014, compared to Dash Lady that only reached 5.86 times, and it less than 2014, which is 7.26 times. The inventory turnover ratio between the two companies is a significant difference, but the ratio for BreakTalk in 2017 is less than 2016, which from 28.3 to 27.41 show a slight shrink. Fortunately, The ratio for the Dutch lady from 2017 was more than 2016, suggesting slight improvement from 5.34 times to 5.7 times. Unfortunately, both companies show a slight decline in 2018, which BreakTalk could only reach 24 times and 4.83 times for Dutch lady. Overall, it implies that BreakTalk can more efficiently sell the inventory it buys. In addition, it may show that BreakTalk is not overspending on inventory purchases and it is not incurring high storage and holding costs.
BreakTalk analysis. In 2015, the ratio decreased from 10.82 times to 0.98 times. A low receivables turnover ratio might be due to a company having a poor collection process, bad credit policies, or customers that are not financially viable or creditworthy. But in 2016, until the ratio was increased from 0.98 times to 10.7 times, means the company collection of accounts receivable is efficient and that the company has a high proportion of quality customers that pay their debts quickly. A high receivable turnover ratio might also indicate that a company operates on a cash basis. Anyway, the ratio was decreased again in 2017, about 0.28 times, but shown an increase in 2018 from 10.42 times to 11 times. Dutch lady analysis. In 2015, the ratio showed a drastic decrease from 26.78 times to 18.60 times. If a company with a low ratio improves its collection process, it might lead to an influx of cash from collecting an old credit or receivables. The ratio from 2016 to 2018 also showed a decreasing from 80.60 times to 11.57 times, 9.9 times, and 9.3 times, respectively. The company must have poor collection process or bad credit policies to the customer. Based on both companies' account receivable turnover ratio above, BreakTalk showed a positive statistic compared to Dutch lady. Even though the ratio was decreased in 2015 and 2017, the company still managed to increase in 2016 and 2018. The statistic for Dutch lady is worse because they are keep decrease from 2015 to 2018. BreakTalk analysis. In 2015 and 2016, the ratio was increased from 2.86 times to 2.96 times and 7.11 times, respectively. When the turnover ratio is increasing, the company is paying off suppliers at a faster rate than in previous periods. An increasing ratio means the company has plenty of cash available to pay off its short-term debt in a timely manner. But in 2017 to 2018, the ratio showed a drastic decrease from 7.11 times to 2.95 times and 2.74 times, respectively. A decreasing turnover ratio indicates that a company is taking longer to pay off its suppliers than in previous periods. The rate at which a company pays its debts could provide an indication of the company's financial condition. Dutch lady analysis. In 2015, the ratio was decreased about 1.3 times from 2014. A decreasing ratio could signal that a company is in financial distress. Alternatively, a decreasing ratio could also mean the company has negotiated different payment arrangements with its suppliers. In 2016, the ratio was increasing from 2.51 times to 3.12 times. An increasing account payable turnover ratio could be an indication that the company managing its debts and cash flow effectively. The ratio was decreasing again in the next year, but increasing in 2018. Based on both companies' account payable turnover ratio above, Dutch Lady show a positive statistics compared to BreadTalk. Even though the ratio for BreadTalk was skyrocketed in 2016, but they keep decreasing until 2018. The ratio for Dutch Lady was stable even the statistic was up and down from 2014 and 2016 respectively.
Starting with the year of 2014 with the ratio of 0.55, Dutch Lady is showing that they have done a good job in controlling the amount of debt to not overtake the amount of asset. In 2016, the ratio increased a little bit with the amount of 0.62, but is still under control and not increased abruptly. From the year of 2016 until 2018, the company's ratio continuously increasing, which means there are additional amount of debt every year and the company should control it to not going over 1.0 as it will give the company a greater risk later. Starting with the year of 2014 with 1.19 shows that the company is having a difficulty where the debt is more than the asset. The company is facing more risk as the debt overtake the amount of asset. However, the company's success in bringing back the company's asset and overtake the amount of debt in 2015, where the ratio shows that the decreasing amount from 1.19 to 0.73, which is good. The company maintained a good job from 2015 until 2018, where the ratio per year does not have any change drastically, and average ratio for the debt ratio is 0.72. Based on the ratio between the two listed companies, which is BreadTalk Company and Dutch Lady Company, both have done a very good job in maintaining the debt ratio to not be more than 1.0. BreadTalk facing a risk in 2014 but still managed to keep it down on the next year later, which is in 2015. Dutch Lady also done a very good job in maintaining the ratio under 1.0. Both companies are actually doing well and Dutch Lady need to be aware with their liability in the next year to not overtake the amount of asset because it will give the risk to the company. Year of 2014 with the ratio of 41.81 times showed that the company capable of handling the outstanding debt or any interest that may arise in future. In the year 2015 and 2016, the ratio shows an increased state with 52.31 and 63.01. This shows company earn great earning rather than the outstanding debt and interest. However, in the year of 2017 and 2018, the ratio decreases a little bit with 52.55 times and 49 and 92 times. This could be because of the earning earned by the company decreases or maybe there are increasing in interest. In the year of 2014, with the ratio of 6.69 times, the company is really capable of paying back in the interest or any outstanding debt based on the earnings. In 2015, with 4.77 times, the company still could be able to take care of their debt even though the ratio decreases. In 2016 and 2017, the ratio slowly increasing with 5.15 in 2016 and 7.52 in 2017. This means the earning earned by the company can overtake the interest and outstanding debt. In 2018, the ratio decreased abruptly to 2.72 times only. That is a big change from the year before, and that also means the company does not earn much compared to before, or maybe there are increase in outstanding debt. So, based on the ratio between the two companies, which is BreadTalk and Dutch Lady, it is shown that Dutch Lady Company have better ratio than BreadTalk Company, and it is a good thing for the company in the future. as they can prepare for any outstanding debt or maybe any interest. BreadTalk company have lower ratio and very unstable, which can give a problem to the company in the future. They need to give also solutions for their company to make sure the ratio did not going overboard, or maybe the ratio will be stable in the future.
As the conclusion, BreadTalk company has monopolized almost whole analysis by showing a better performance in a 5 years analysis based on profitability, liquidity, and solvency. BreadTalk company achieved optimal level of performance and accomplishment, which has benefited continuously on their profitability ratio. Liquidity ratio also show that BreadTalk company doesn't have any problem in settling debt on a short-term period. Solvency ratio show that BreadTalk company may be unable to pay its debt in the future. However, it can be controlled if the company able to keep increase the profits. That's all from our group. Thank you.